Hi everyone, and welcome to another episode on our monthly economic update for the month of March, brought to you by the Economic Intelligence Unit through our platform Economy.lk. So let me start things off with the growth, GDP growth figure. So for the year 2024, Sri Lanka's economy grew by 5%. And as you can see here in this particular chart, Sri Lanka's economy grew 5.1% in quarter 1, 4.1% in quarter 2, 5.3% in quarter 3 and 5.4% in quarter 4, resulting in an average growth of 5%. And if we dive in a little bit deeper into the sectors, the production sectors that contributed to this particular growth in terms of industry, services and agriculture, except for agriculture, which contracted, both industry and services grew for the year 2024, and that is what you see here in this particular graph. So if you look at towards the end, quarter on quarter, the last quarter of 2024, we saw a contraction in agriculture by 2.2%. Industry, however, has been growing for the year, and services, which is in red, has also been growing. Agriculture grew in quarter 1 to quarter 3, except for quarter 4. And if you dive in a little bit deeper into agriculture, into industries and into services, which of these industries contributed to growth, to the growth story of agriculture, industry and services. So first, let's have a look at agriculture. That's what you see here on this particular slide for 2024. What you see here in yellow is quarter 4, and you see what has contracted severely is, if you look towards the very right hand, it's freshwater fishing and freshwater aquaculture. And then there's growing of fruits that has contracted by 27.2% for quarter 4. And then growing of cereals, which has contracted by 14.4%. Next, if you look at this particular slide, which is the industry sector, you see construction has grown by 27.5%, manufacture of furniture has grown by 29.1%. Very few areas such as manufacture of wood and products, and then you have manufacture of chemicals that have contracted, but very few industries within the industry sector have contracted. More or less, most of the industries have grown for the year 2024 quarter 4. And then we move into the services sector. That's what you see here. So quarter 4 services, you only see mainly insurance, reinsurance and pension funding, except compulsory social security having contracted for the quarter 4 of 2024, which is again in yellow. And you see other industries have grown for the year 2024 and quarter 4 of 2024 in the services sector. That is for 2024. Next, what we had to look at is the growth outlook from the multilateral agencies and the central bank, and that's what you see here in this particular slide. So central bank is quite optimistic, saying that the Sri Lankan economy will grow at 4%. We hear the central bank governor also mentioning that the economy could potentially grow a little bit higher than that figure. And the budget speech also mentioned that the economy would grow at 5% for 2025. Whereas the multilateral agencies such as ADB and IMF are a little bit conservative, as you can see. And the World Bank is a little bit more optimistic, expecting the economy to grow at 3.5%. Next up, let's have a look at the PMI index for manufacturing, for services and the construction sectors. What this tells you is how the folks that are working within these sectors are looking at the sector and whether they are optimistic or pessimistic, what kind of an outlook do they have for the next 3 months. And that is what you see here in this particular slide. So PMI manufacturing for February 2025 is 56.8. PMI services is 56.5, PMI construction is 55.6. All three indices, as you see, is more than 50, which indicates that the outlook is positive going forward. Next up, let's have a look at the credit supply. So credit supply has been positive. Credit to the private sector has been growing. Credit to the state-owned enterprises have been contracting slowly in terms of absolute figures, which is a good sign. Because you reduce the crowding out effect and there's more credit available for the private sector to invest. And so that is what you see here in this particular slide. In terms of willingness to lend, demand for loans, non-performing loans have all improved, and willingness to lend by category and demand for loans by category, you see that there is growth in the retail, corporate and SME sectors. And then we come into inflation. So inflation is at the moment at a deflationary stage, even for the month of March, which was released quite recently. However, month of March, year-on-year deflation was a little bit lower. It has improved compared to the month of February year-on-year. So that is what you see here on this particular slide. On your left-hand side, you see for the month of March, year-on-year inflation is at negative 2.6%, which is slightly better compared to February, which was at negative 4.2%. Now, what is contributing to this deflation is what you see in the middle graph, middle component, which is transport and the utility aspect. So utility and transport, which are more supply side impacts, have a deeper impact on this deflation. And then with the deflationary state taking place and continuing, central bank expecting that inflation will slowly start picking up at the end of Q2 for this year, with the base effect reducing. Central bank kept its monetary policy rates at 8%. The OPR was kept at 8%. Now, if we switch over to the trade sector, what I have shown here on this particular slide is exports from Jan to February 2023 compared to 2024 versus 2025. Total exports, as you can see, has grown by 4.755% from 2023 to 2024 and a little over 6% from 2024 to 2025, Jan to February. And the next slide goes into product-wise exports from Jan to Feb 2024 to 2025, except for a few products such as rubber-based products. Mostly the other merchandise and service sectors have improved from Jan to Feb 2025 compared to Jan to Feb 2024. And the next slide shows us the top 15 destinations that we export our products to. Mainly it's the US, followed by India, UK and Germany and other countries. Next up, we'll have a look at the remittances aspect and tourism aspect. Remittances have obviously picked up, which is a positive sign. I think for the first 2 months, about $1.1 billion have come in so far for the year. And in terms of tourism, that is what you see here on this particular slide. Tourism numbers have also picked up. What you see here is 2018 compared to 2024 compared to 2025. 2025 is in green, and we already see about 722,000 tourists coming in, more than 200,000 in January, February and March. And if you dive in a little bit deeper, where are these folks coming in from? That's what you see here on this particular slide. Mainly it's from India, followed by Russia, UK, Germany and France. And on this particular slide, what you see on your right hand side is interesting. That is the airline arrivals and market share. So if you see 2023 and 2024, Sri Lankan Airlines accounts for almost 30% of airline arrivals in the year 2024, which is in orange, followed by Qatar and Emirates. It's also important that the central bank builds up its foreign reserves. As of now, it's at around 6.1 billion, keeping in mind there's a 1.4 billion swap facility with PBOC. But this is an interesting slide. It shows us by 2030, the central bank has to increase its foreign reserves up to $15 billion, which is about 5.7 months of import cover. And with all these factors being considered, the exchange rate has been hovering around the 300 rupee mark per US dollar. And that's what you see here on this particular slide. Fluctuation has settled, and that's a good sign. Car imports have been opened up, although the pent-up demand has not been met with higher taxes. We see the exchange rate has slowly depreciated by about 1.5 to 1.7% for this particular year, whereas we saw in 2024 the rupee actually appreciated more than 10%. And then finally, the global outlook. That is what you see here in this particular slide. For the global economy, IMF predicts it will grow at around 3.3% in 2025 and 2026, and the emerging markets will grow at around 4.2% for 2025 and 2026. So that's a wrap from our end. Thank you for tuning in, and we look forward to seeing you in our next monthly economic update. Thank you very much.